And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time from the coaches at Tackle Trading, breaking down all the market news, action, information, charts, giving you guys some insights so you can better run your daily routine. And welcome back, hashtag Team Tackle, right in the chat as we're getting started with the conversation here today. Appreciate you guys as always. And if you are brand new to our channel, coming in for the very first time, we do this kind of content each and every day whenever the markets are live. Make sure you smash that subscribe button. Come back and join us on a daily basis, and you'll get an alert if you click that bell. It'll let you know right from YouTube and Google when we do go live. I got a fun show planned for you here today on a light news week. I had a couple of different things happen over the last 24 hours, though, that are going to be interesting. Gamestop did report earnings. We're going to be breaking down a little bit of the technical response from that stock, who's been in the news much of 2021 here. Obviously caught the attention of the public. We'll take a look at what happened with the earnings. CPI report for May showed very, very strong inflation readings. I'm sure the Fed will dismiss them as transitory next week at the meeting, but we'll have a conversation about the market response from that. Actually, we started to rally a little bit off of that report, but let's bring in the coaches here first before we start getting too far into the analysis. Got Coach Matt, Coach Tyler, and Coach Greg here today for another Thursday edition of our Halftime Report. Greg, you first. How you doing today, sir?
Fantastic. Thanks for having me on again.
Yeah, wonderful to have you as well. And Greg, I understand you've got 3 different stock ideas for our Thursday segment we've been holding here recently. Buy one, hold one, dump one. And from what I understand, and no teasers yet, I guess, but from the communication sector, right? You found 3 companies we're going to break down?
I did, yep. Yeah, communications is doing pretty well right now, and so I thought that'd be a good space to look at.
Looking forward to it as always. I enjoy that quite a bit here each and every Thursday that we do that. We'll look at some of the fundamentals behind those companies, and Coach Greg, Old Money Homes, the perfect guy to bring some ideas around that. Coach Tyler, how you doing today, sir?
Hey, you know what? I thought I'd help the S&P out, get my rally cap on, and so far so good. I should bring this out more often.
Yeah, look at that rally cap. You're looking great, kid. And number one, and by the way, I'll call you kid even when you're 70 and I'm 70 like 4. So it is what it is. But look at that rally. We are testing into a new all-time high here, Tyler. 42.38 was the ding we had from May 7th. It was staring at us on the chart. Now we got a little new white little bubble up there telling us that we did test a new intraday all-time high. We'll take a look at those technicals here in just a second. But Matt, how you doing today, sir? Pleasantries first.
Oh, thank you, Tim. I didn't know if you're going to bring me in. I thought you were going to run right in there with Tyler on technical, so appreciate that. No, Tim, doing very well. Let me put it like this. I'm doing a heck of a lot better than GameStop.
Okay. Today,
fundamentally.
Okay. Fundamentally for sure.
Technically it's all momentum. I don't have that type of momentum.
Yeah.
I'm doing much better than GameStop, but I'm not doing nearly as good as inflation rising across the board around the entire world.
It's something. It's something.
I wonder if the Fed can still use the word transitory when literally every country is projecting higher inflation around the world.
Mm-hmm.
I wonder if the Fed's vanity can stop that freight train.
My guess is
vanity stop an inflationary freight train?
No.
No. It's never worked in the past. We'll see if it works this time.
Hey, you've never seen this kind of vanity before, Matt. I don't know.
That's true. They do have a whole new version of vanity. This is true.
The Fed does meet next week, the FOMC policy meeting on Wednesday. Obviously, they're going to be talking about some of these things that happen. We'll see what they have to say about it.
And very quickly, just let me get the news out there with the central banks. We did have 2 central banks come out over the last 24 hours to report central bank policy, the Bank of Canada. Greg, my friend to the north here, what'd Canada do?
Nothing. Same thing we always do.
So I have nothing to add on top of what Coach Greg did. Canada did nothing. And later on in the night, we had the European Central Bank come out, and Greg, I'll just go to you again. What'd they do?
Big bull and nothing.
They did nothing too. But they did update their inflationary projections, and that's where my comment came from, inflation increasing around the world. Christine Lagarde came out and is now projecting 2022 inflationary CPI. And I just want to take a moment to give Mario Draghi some credit here. He's been trying to get the European CPI report to 2% for the last 10 years. Well, Christine Lagarde's officially putting out that CPI 2022 projection at 1.9%. So, Greg, they're getting there. Real inflation, we can talk about that at a later date. But right now, you're seeing inflationary projections go up. CPI report, you want to talk about what's going on in the stock market today. Inflationary in European data, inflationary in U.S. data. CPI report, take a look at the 30-minute chart very quickly, Tyler.
Mm-hmm.
CPI report comes out this morning, 5:30 my time, 6:30 Tyler's time on his chart there. You see the CPI report, big increase in inflation quarter over quarter, market response, snapback. Now, that's kind of the news that's driving the market very early.
Mm-hmm.
And now talk to Tyler about the technical reaction.
Well, and there's some notable things in there. It's kind of like we're breaking records here, Matt, in that regard. It's like when you're following sports, the most points in a game since 92. Well, we had some of that here today. The core CPI, which is ex-food and energy, was the largest year-over-year increase since 1992, rising 3.8% over the last 12 months. Regular CPI rose 5% year over year, the largest increase since 2008. Used car and truck sales went up 7.3% on the month. Terms of inflation.
By the way, I just want hyperinflation is 10% monthly increases.
Mm-hmm.
We're working there.
We're seeing some scary data. There's no question about it. The market obviously is responding in a very, very bullish fashion.
Hey, Fed, there's tools in your disposal to fix this.
I just like to put out there to the tackle community and anybody listening, I have a Ford truck for sale, used truck for sale.
A little bit better price here.
I think I'm going to get more than I paid for it, Tim, if this keeps up.
And that was funny, Greg. And just very quickly on top of that, there were some disagreements in the European Central Bank regarding monetary policy. These inflationary concerns are starting to get real, guys, and they're starting to have an impact at the top of the market, i.e., the central banks and how they are seeing where to push interest rates. 3 members of the European Central Bank disagreed with what they're doing from a QE perspective. They wanted to start tapering a lot more aggressive. Now, remember, guys, Europe has a very, very significant history when it comes to monetary policy and inflationary pressures. And there's a lot of extremely conservative monetary governments in the European Union. We in the US, we don't have that type of history that Europe does. And so we are seeing some disagreements there regarding monetary policy. Can that shift to the Fed coming into the future regarding the tapering process, interest rates? Maybe. We'll stay tuned on all of that, but we are seeing a little bit of that starting to creep into the analysis of, hey guys, maybe just hypothetically, we've pushed too much money to the top.
Mm-hmm.
So we'll see how that has an impact down the road. But that did happen on the overnight.
At least
I have a question on that.
Oh, go ahead, Ty.
Sorry, real quick. So if the ECB tightens before us, that's bearish dollar, right?
If the ECB tightens before us, that's bearish dollar, yes.
Okay. Which has been bullish for the stock market, by the way.
And that would be bullish for the stock market, but it would be very mixed, though, Tyler. I mean, when you're talking about stock market, when you're talking about the coordination of Europe and the United States Central Bank regarding stock appreciation over the last 12 years,
you got cross
Europe
currents,
acts,
right?
that has an impact on us. So it would be mixed data, but it's. Let me just put it like this. It wouldn't be as clean as saying, oh, Europe raises interest rates or come off quantitative easing, dollar down, gold stocks up. It would not be as easy as that.
All right, I was hovering over the buy button, but
I know you're hovering over the buy button for some other reason, but yeah.
Somebody else hovering over the buy button right here on the intraday. As I'm watching this thing just rally a little bit off the lows, but let's talk about the technical response here, Tyler. What are you reading into this response from the market? Like Matt just detailed, the rally started pre-market off the economic data. Traders started to push prices higher. Right at the cash open, we're up near 42.49, and then a little bit of a sell-off. We're retesting support, coming rallying back here. How do you break it all down here, Ty?
Well, if you were coming into today, the last thing that we wanted was to talk about another doji. I'll tell you that. So I think we're pleased that we're seeing some volatility here, but the range has been obvious. We've talked about it ad nauseum for the last week. And you got a breakout. I think that I think you have to be, look, the best breakouts don't come back, right? This one came back, got a little sloppy, but are you not, I feel like Russell Crowe on the Gladiator. Are you not entertained? I mean, is this not what you'd want if it came back into the range, a higher low, a resumption of the breakout attempt here. Now we're back above that resistance level. We'll see where it closes, but I'm liking what I see intraday here. I'm liking it a lot, actually. So you go to the daily chart, and there you go, 3 dojis, and then you got this nice green bar. So far, so good. I'd rather this not fail. I'd rather this attempt succeed. And this has not just been the last week. It's been a couple of weeks of a sleepy market. So yeah, give me some upside volatility. I'll take it.
Mm-hmm. Greg, what about you? Obviously, here on the S&P, we are pushing towards an all-time high. We may close there here today. It's looking like it as of the current print that we're watching right now. This market has been sleepy the last couple of weeks, Greg. In fact, a very tight intraday range over the last 4 days. But even 6 or 7, 8 bars before that, we were holding. So this base has given some time the ability to catch up a little bit. Some of those moving averages are slowly catching up. But I know old money style and you're always going to be concerned about high prices in that regard if it's not the value. But momentum's there. So how do you break it down, Greg? What's your read on this market?
Well, I think we've been talking in this way for, as you pointed out, 2-3 weeks now, that it's just kind of been pushing its way higher, albeit very shallow like. Tyler brought in a movie quote or image there. I'm going to bring in one of my own. This break today is reminiscent, as far as I'm concerned, of Lord of the Rings, when the orcs are trying to break into whatever that stone castle is. I forget what the name
Helm's
is.
Deep. Helm's Deep, Greg.
Helm's Deep. That's the one. That's the one, Tyler. So this is reminiscent of that to me. We're finally getting a breakout to the upside, and it's been pushing that way for a while. I don't really think you can read too much into it. It's just that the technical picture that I see. Does it? The only question I have, and Tyler kind of referred to it, is, does it hold, or do we lose it in the next 2.5, 3 hours, right?
Mm-hmm.
So as long as it holds, then I think we start pushing a little bit higher. If it doesn't, then we've got faked out again, and we'll see what it does from there.
Mm-hmm.
So,
Within the first 10 minutes of the show, I get a Gladiator reference and a Lord of the Rings reference. It kind of tells me a little bit about, number one, your age, because those are early 2000s movies. Maybe we should have a list of the best movies from the early 2000s rolling here.
Whoa. Give it about 10 minutes. I was fully planning on coming in with Rambo First Blood references. Like I was getting ready for GameStop earnings call. Like
I got a cool hand Luke one ready to go anytime. So we go way back if you want. But
dude, I love those 70s cowboy movies as well. All right, Matt, what about you? Obviously S&P may be closing at an all-time high here today. It's been a sleepy week for the market, and before this, but now here we're pushing towards a breakout. How are you reading this?
Yeah, I'm reading it similar to Tyler on it. It's a volatile beast today, right? We're talking about a potential breakout. We're talking about on the backs of some fairly significant news, right? The CPI data, the European data on the overnight action. So it was one of those moments where and obviously GameStop's earnings from yesterday is having a role specifically in the Russell 2000. We'll talk about that here in a second. But when you're looking at the market, Tyler, 100%. Thank you for not talking about a doji today. Just thank you for waking up a little bit and starting to see. But it is a little bit of volatility. We'll see where that closes for me, right? Mm-hmm. I think that close is going to be very important. There's a couple things I really like on the intraday, though. Number one, when you had after the snapback, right? You have the push to break out on the CPI report, and then you have the snapback, and that snapback was really volatile. And volatile meaning it was punching down really fast, and it came into those historical support levels that we've detailed quite a bit. And 4220, it's got intraday support, there's no doubt. But if you guys will recall, 4220 was a number we talked about significantly for weeks and weeks and weeks in the S&P. And so it comes down into that intraday support, snapbacks, test that support level, and confirms fairly quickly as the market starts to really kind of wake up. The second data point that I really, really like here from a technical perspective is the one that just barely happened 20 minutes ago as we were getting started in the halftime report here today. when you had that situation where it's coming back up into resistance and you consolidate and you see the turning over technically, right? You see that slowing momentum, turning over technically, but it doesn't violate any support. It violates resistance. That's showing you that the market is building the confidence. You have now on the intraday, again, it's volatile, but we're talking about a day when we're talking about big time increases in inflation across the board. But when you're talking about the technicals, you got to like the increases in support intraday, both at 14.15, 42.20, 42.30. Now you're breaking out of resistance. This feels like the hallmark makings of an intraday trend that wants to confirm. We'll see if it does confirm by the end of the day. But if you close towards the high of today, guys, you got to be projecting higher on the S&P, in my opinion.
Yeah, I mean, that's the trend, and that's close above the resistance point. You got to call that a breakout at that point, Matt. If we do close up here at 42.45,
well, and then after weeks of consolidation, it's just always good to take a look at that weekly chart.
Mm-hmm.
And the weekly chart looks really, really, really healthy right now.
Mm-hmm. Tyler, what about the rest of the indexes? Obviously, the S&P here, as we're breaking it down, pushing towards the all-time high. This is where I've got the strongest index. Number one, used to be the Dow was pretty close, and it's still pretty close, but not quite as strong in my personal opinion. 1A, 1B is a very good way to say it. What are you seeing in the other three indexes, Tyler? Break them down if you can.
Yeah, so the NASDAQ is also participating today. I think what's fascinating to me with the NASDAQ waking up is you haven't seen as much of, like if you told me a month ago when the NASDAQ was in a downtrend, a double bottom, that, okay, we're going to run from 13,000 back up to 14,000. I probably would have thought that Apple was going to participate, that Amazon was going to participate. And they really haven't. So the interesting thing is some of those big tech names have not participated as much as you would have thought. But look at the candle today.
Mm-hmm.
I mean, that's a nice candlestick. Okay. And we're breaking above the high of the last couple of bars. So this is like a 6-week high. We're not yet testing the 14,064, but that in and of itself is a very bullish candlestick, up 1%. I think on a percentage basis, that might be more than the S&P. Yeah, S&P is only up 0.5%. So on a 1-day basis, you're seeing relative strength out of the NASDAQ, which is, I think, healthy, right? I like NASDAQ leadership. I like when growth is leading. I think it tells you that investors have a bit of confidence and conviction with buying right now. So I'll look at the Russell next, but anything on the NASDAQ before I do that?
No, it's been healthily developing now for the better part of 2-3 weeks, on very, very key levels that it was fighting against, testing. I love that line you have about like 13,450, where it had that one intraday sell-off and then rallied right back. Maddie, what about you on the NASDAQ here?
Yeah, I just want to ask Tyler a question technically, because on the NASDAQ, I've been saying for weeks now that the projection has to be to 14,000, but nothing above 14,000 in the short term. On the weekly chart, you see this. It's not textbook, but it's very similar to a cup and handle, right? Mm-hmm. And that's one of the reasons why I like that projection of 14,000, because that's the top end of the consolidation of the continuation pattern of the cup and handle.
You're calling this the cup, this the handle.
Yeah. And again, it's not textbook because you do have that slight increase in resistance, right? You're not horizontal. But and so you do have it maybe as a slight slowing momentum or cup and handle, but both of them are fairly similar. Consolidation, looking at the breakout.
Yeah, well, it's not a stretch because I think it lines up with any other way you want to look at this. It's like, look, you're bouncing off support. The resistance
either
is the
way,
obvious first target,
right?
Yeah.
Either you're looking at slowing momentum or you're looking at it as a continuation, but the breakout's still tradable. Tyler, my confidence is building as we're approaching 14,000 on the breakout. Can you just break this down from a technical perspective on that 14,000 breakout and how legitimate that 14,000 breakout could be technically? Because and don't get me wrong, I still like the S&P and I still like what the Russell's doing a little bit more than the NASDAQ, but I'm starting to see something here that could be good above 14.
Sure. Well, I mean, So two things, I guess. The first thing I would say is you tried to break out back in April, but you had a pretty big run up. I mean, we ran from 12,000 to 14,000. It's, as you've mentioned numerous times, it's tough when the breakout is preceded by a big ramp, right?
Mm-hmm.
This has been a little bit slower going, right? Like the candles are a little bit smaller, and so it's a little bit more believable when you break out. Like you have more gas in the tank, right? You haven't run as much into that breakout attempt. But I think it's also a sign that just tech is back. Tech is back, and growth is back. And we've highlighted that with semiconductors and everything, and they've been gradual. Maybe I'm just wanting to go back to November and July when everything was just epic on the volatility front, but it just seems like it's been very slow and steady with semiconductors, right? Like they haven't gone up leaps and bounds, but they're slowly getting better. I think the hope from a bullish perspective is that this is a catalyst and really spark some multiple percentage moves over a week or 2 weeks, where you actually get the market running. But yeah, I like the break over 14 for sure. Let's make it happen.
And I guess one of my questions I'm having personally is, do you like that potential breakout more than what's happening in the breakouts in the Russell 2000 or the S&P? And for me, at least, the answer is still a no.
Mm-hmm.
Yeah, well, it's not there yet. So I think it would depend on what I like the other ones better just because they've been doing better, but I don't know that would
You want
matter
to see
to
the
me.
breakout first. You want to see do we have an increase in volume on the breakout? Do we have a no sell day on the breakout? What's happening with semiconductors on the breakout? You want to see the analysis as we're breaking out, correct?
Correct. I'm definitely intrigued, but like I don't know if it would change the way I'm trading this for me to say right now I like NASDAQ better than Russell. I'll trade it when it gets there. Yeah.
And personally, I like the Russell better, and personally, I like the S&P better, and personally, I still like the Dow better as well. But again, when indexes wake up and they're looking at potential breakouts, things can happen fairly quickly. And so just want it to be on the radar, right?
Yeah.
I still think 14,000 is the number. I still think consolidation at 14,000 makes some sense. But I am with Tyler. You got to be aware of this potential breakout. And obviously in the halftime report, we're going to break down those key metrics when it does break out. What's volume doing? What's the industries within the NASDAQ doing? Is this something that is legitimate, or is this something we need to snuff out and fake out, right? Yep. So be with us in the halftime report as it happens, but it's in the cards. We'll just see if it can do it now.
Over the past month, the Russell and the NASDAQ both have about 4% advances as their charts have improved, pushing towards breakouts. The S&P was kind of stuck up there in the high, but it took the month off as we were waiting for it to eclipse its high. So I love the conversation there, guys. Appreciate it. Breaking that down from a multiple time frame analysis as well. Very, very good. All right, let's move into the rest of the markets here next. Go to commodities if we can. Ty, crude light. First off, as we always do, Coach Greg broke out, took off. Here we are hanging up near 70, healthy trend, really, holding the intraday trend lines, holding the price points up here at the top. We haven't had a significant red bar in quite some time here, Greg. How are you reading crude prices that have broken out and started to rally?
Yeah, this is interesting movement to me. We've had a very organized, orderly kind of move up, and it's just kept going. And we've had what do we got? 2, 4, 6, 8, 10, say 14 sessions, and of just kind of creeping up a little bit. We really haven't seen that kind of move probably since February-ish there, and even February wasn't the same. So very interesting here, just creeping up. I don't think there's much to say. It does kind of appear a little bit maybe curling over, just slowing down a little bit there. So I could see a little bit of sideways action here, or just a continued float. Like it almost seems like it's floating to me, and that's good for anybody who's already in the oil trade. That's for sure. The real thing comes here is if it turns over and comes back and tests that 67 level there, that would be what I would be paying attention to there. Yeah, until further notice, like I said, you're on the float up as the case may be. So.
Developing a couple of candlesticks where their bodies are trading right near that $70 mark. I know we've been dancing around the intraday where we pop our head up a little bit, whack-a-mole right back down. Tyler, potential high base development in those characteristics, that takes time. We saw it with the S&P over the last couple of weeks, but could be that pattern developing. What are you seeing here in crude oil, Tyler?
Yeah, I'd echo what Greg said. I don't think there's much new here. There's not a trade. If you're saying, is there a trade set up? The answer is no. It needs some time. But I ain't mad at it. I mean, it just behaved very well, running from 60 to 70. If it wants to chill here for a few days, fine with me.
Chill for a few weeks. Chill for a month. Don't care.
Okay.
I mean, if it holds up here and just continues to keep those pivot points intact, I think the trend intact, a time correction would definitely be fine there. Matt, anything you want to add on crude?
Oh no, I think it needs some time to set up, quite frankly.
Yeah, I agree.
But 70 is just one of those numbers it's going to gravitate to.
Yeah, it's
we
kind of
could see some consolidation there before you see a new trigger, but you got to like the momentum in the short term. It's just a matter of just letting it establish itself and set up.
Yep. All right, next one here, gold, if we can, and it's been hovering around $1,900 an ounce, dancing back and forth around it for a couple of weeks now, actually. It rallied right off that trend line that Tyler has. Love those lines that both of you have, almost identical ones. Tyler, any technical response here that grabs your attention? Nice little lower tail on that candle, actually.
Yeah, reminiscent of the June 4th tail, right? So I think you got to be pleased with that. Look, this would be a different conversation if we had talked when this thing was down here, right? At one point, say this was a big red bar. So you probably had some volatility, yeah, with the CPI stuff. So this is reacting bullish alongside stocks. So yeah, I mean, I think you got to be very happy with this candle. Mm-hmm. And if we went back a week, what would you have said when this was up here? Well, we probably said, look, it's made a run. If it pauses, if it chops, to be expected. You probably didn't want it to be as volatile as it's been, as it's chopped, but ultimately it's gone sideways. Like ultimately, this is a pretty constructive consolidation pattern to develop after this thing was as overbought as it was. You had a few freakouts, fine, but I don't know. I mean, overall, I'm pretty impressed, and I love this bullish hammer candle today.
Greg, what about you? How are you approaching gold? Do you like this trend developing as much as Ty and Matt do?
Yeah, so I was actually happy to see this pullback. I think we talked about this last week when I was on here. I was happy to get a pullback for some more exposure. I love the fact that this came right down to that 1850, which was old resistance back here. Support here as well. I thought that number was significant, just as 1900 was significant here, just as 1950 was significant there. So it seems like the $50 levels here just tend to work. I like the response in the fact that it didn't, it had a pretty impressive run there for a while. And it didn't get beat up as bad as I thought it might. I thought we might get a little bit more pullback, and we didn't get it. So again, that's just kind of showing you the strength in gold there. With all these inflationary numbers come out, it really doesn't surprise me that much that gold's holding up better. And frankly, I'm glad to see it. And again, as I stated last week, this little pullback here to the 1850, I think was a good opportunity in my estimation.
You asked me this question a week ago, and you asked me it a week and a half ago, and I said both times, look at my line, it's going to take 2 weeks to get there. So I'm just going to update that time frame and say next Thursday.
Okay, I like it. Well, that's not an updated time frame from a week and a half ago.
It's Thursday, the same time frame.
It's about the same time frame. I gotcha.
I kid, but not really. Give it a little bit more time. The analysis is there for gold. It hasn't really changed. Yeah, I do agree with Tyler that nobody likes to see random volatility, but gold has much more price performance with currency than it does stocks. Sure. And it has an impact in the currency market that stocks don't, because of the correlated or the divergent relationship that gold has with the United States dollar. And so it's typically going to be a little bit more volatile than equities. Not every equity, but just S&P, Dow, stuff like that. So no, Tyler, nobody wants to see it, but it's also, you also know what you're playing with when you play with gold, right?
Yep.
And so, yeah, I do think that shores up a little bit. I do think you give it a couple more days of time. I like the analysis. It's choppy. I got a long-term projection higher. I think the consolidation is very healthy over the last 3 weeks, quite frankly.
Yeah. Yeah. I think it's healthily developing.
But then again, I also hate V-shaped gold analysis. Like, there is nothing that drives me more crazy in trading than V-shaped gold stuff.
But most importantly, I got to write this down. Next Thursday,
7:30.
Next Thursday, 7:30, Matt's line. I got it. All right. I'm going to put a Google Calendar reminder on my Google Calendar. You watch.
I'm not coming off it.
You don't. And I'm not coming off of that statement. You know me. I will put a Google Calendar reminder out there. All right. The dollar next here. We're testing support. A lot of economic data here today. And actually, economic.
For those of you new to tackle, very quickly, I kind of kid. We're joking around a little bit with the time frame, but again, not really.
Yeah. You had to get that. You had to get that disclaimer.
Well, you just never know, right?
But not really.
Like, all I'm saying is give gold enough time to catch up to give the time enough for the trend line to catch up to the price. That's all I'm saying.
That was like Babe Ruth pointing and then going, well,
listen,
maybe the other way.
Listen,
maybe the other way.
what me calling Bitcoin going up 100% followed by 100% crash wasn't pointing.
That was Babe Ruth pointing.
That wasn't pointing.
Yeah. Okay. You'll probably win the Volcker for that one at the end of the year. Speaking of Bitcoin, let's take a peek at it right after the dollar. Dollar not doing much down here on support. The economic data, Matt, leads to potentially downward pressure on the dollar, but until it breaks down off that support, there's nothing here to read, in my personal opinion. Anything any of you guys are seeing in the dollar chart that grabs your attention?
No, I'm with you right there. Full step, Tim. I mean, you're looking at a scenario where you got pressure to the downside. You're fighting against some very important, support levels that, if violated, could see some significant pressure on the dollar to the downside. Mm-hmm. That is not necessarily a negative for a lot of people, though. Dollar breaking down is typically a positive thing for asset appreciation. And so if the dollar does fail at support, you should see a little bit of additional coming into the bullish stock market. You could also see gold appreciate in that environment. Bitcoin loosely can appreciate in that environment as well. So it's not necessarily a negative for investors and asset class owners, but it certainly can be for the consumers who are dealing with some very, very, very significant inflationary pressures. And so concerning, right? And I don't want to go down that ESBI quadrant today because I am very concerned about some of the E and the S right now from an economic perspective. But from an asset perspective, if the dollar does violate, it should be a little bit of a bullish, a little bit of a cherry on top to the bullishness in the stock market.
Yeah, it would add to the theme. Absolutely. Yeah.
Go ahead. As Matt said earlier, like the Bank of Canada, like the European Central Bank, and like Justin Trudeau's head, nothing to see here.
Nothing to see here.
There you go. Bitcoin next. Speaking of nothing to see here, you got a doji in the middle of its range, more to the top of the range than it was a few days ago, but still a messy, choppy chart in perspective in that regard. Tyler, what are you seeing here technically? I mean, it came into that 9 EMA eventually and actually smacked its head, but what are you seeing?
I would echo what we said yesterday. Yesterday was a big update, but again, we've seen this movie before, but bounces and downtrends are suspect. And so not surprising, you're encountering some resistance. That this is what rallies do in downtrends. So I think we said, wake me up when it gets above 40K. I mean, the pattern is rallies are getting sold. Once again, a rally is having some trouble. So to be expected. This is typical of the downtrend. I don't think today changes anything.
Do you have a scenario at this point in the chart, Tyler, that is setting up a potential, not an investment, because I think anything from a longer time frame needs more time, quite frankly. Mm-hmm. But from a short-term trading perspective only, are you seeing a scenario where you could potentially K-trade scenario above 40 versus down underneath 30?
Yeah. Sure.
Yeah, and the more consolidation that happens there probably lines that up a little bit more too.
Yeah, the more times levels are tested, the more significant they become, and probably the bigger the reaction once they're taken out. So I would agree. Yes.
I got a question for you, Tim. So Bitcoin's up a little bit today. Ethereum's down. What's going on with that? How come? What's the divergence there?
Take a peek at the Ether chart if you can. I mean, it actually held up from its chart a little bit better. Didn't have quite the sell-off, but it's just a choppy mess here in this range. I think it's really trading in similar fashions in that regard here, Greg. If you think about what happened with Bitcoin, it really hit its head intraday, started to sell. If you look at the intraday on Ether, you're going to see similar patterns. I wouldn't read into it too much. You guys were talking about 30K to 40K on Bitcoin. I'm watching 2K to 3K on Ethereum. That's really those.
Well, yeah, and I want to jump on that too, Tim, because Ethereum had separated itself, right? In that initial, when Bitcoin was consolidating towards the top end of the chart, right? When we were talking 55, 60K, right? That range up there, Ether was doing amazing things. I mean, going like gangbusters. But once true volatility hits a marketplace, they all simultaneously do the same thing because the emotional impact on people is the same thing, regardless if it's Ethereum or Bitcoin. You see the same thing in the stock market. When volatility and concern hits the stock market, everything goes down initially, guys.
Yeah.
Everything does. And then it's a matter of, okay, recovery analysis and what starts recovering soonest. And typically speaking, in the stock market, we know what recovers fastest, right? Staples do, things that consumers spend their money do, the consistencies of the marketplace, the stables, the consumer dependent, those things will stabilize a little bit quicker than, say, typically communications does, or typically technology does, or some of those ultra aggressive sectors do. They take a little bit more time. And so right now you're seeing a lot of the cryptocurrencies do the same thing, like Tim is suggesting. And then it's going to become, okay, which one breaks out quicker, right? That's what we're really talking about in recovery analysis is, okay, which one's lining up that potential reversal faster? And when you're looking at it from a Bitcoin versus Ethereum perspective, if we just played the game of which one, I like the Ethereum chart more than I like the Ethereum break of 3K more than I like the potential Bitcoin breakout of 4K.
I think you have to look at the weekly.
That was the reason I asked, actually, is because you get that separation and then they kind of come back together. And so my question kind of to Tim, obviously, just tongue in cheek a little bit, but also and a serious question in how did this separation, or why the separation in these two forms of cryptocurrency, I guess, was my question. So,
well, and for me, the question that goes along with that I think we have not yet answered as market participants, by the way, but I do think there was a key telltale when the rest of when I don't even know how you want to categorize everything other than Bitcoin in the crypto space, but when you saw Ethereum specifically break out and separate itself before the volatility, when it was rising from 2K all the way to 4K, Bitcoin wasn't bullish in that environment. Ethereum was starting to separate itself, got caught up in a lot of this short-term volatility. So from my perspective, I think the movement that in Ethereum was a little bit legit. And so I do think Ethereum can recover a little bit quicker than Bitcoin, but they're going to trade with each other initially.
Yeah.
Does that have? Sorry, Tim. Does that have a price perspective point to it? Is it because Ethereum's 2,400 and the other's 40K, and obviously margins are going to be more to trade these futures contracts and things like is it would that push it at all?
Can I answer that?
Sure. I'm asking generally speaking.
I don't believe that has as much to do with it as others do, because the volume that does come into the futures market pales in comparison to the volume that comes into non-leveraged instruments in these. Like there's a lot of money that flows through not interactive brokers, not Tasty Trade, not those traditional brokers. And there's a lot of money that comes through outside the futures market here. And so I don't know if we yet know that, quite frankly, but also regarding the price point, and I know where you're going with this, Greg, because price points matter, right? But because everything is fractional, I think it matters less there.
Fair enough. Like I said, it was a legit question.
Yeah, no,
100.
100%. And it's not as easy as, oh, well, you have this here and you have that there, right? You have futures tradable instruments, you have non-futures tradable instruments. And so you have to take it as a whole. But to me, and this is how I've always approached Bitcoin's price, is I never get too concerned with like, oh, it's at 30K. Oh, it's at 40K. Oh my goodness, it's overvalued, because we're not talking about a stock with revenue with PE ratios and PEG ratios. We're talking about an asset that, yes, has a price tag to it, but is traded fractionally.
Right.
Mm-hmm.
Fair enough.
Yeah. They're great questions, Greg. And what I just heard there is curiosity from old money.
Yeah, I think old money started looking at new money principles.
Did you hear that too, Tyler? I heard that.
I think
you heard the curiosity.
Hell is freezing over or something. Pigs are flying. I don't know what's going on.
Lifelong student here, kids. Lifelong student.
I love it. I
love it, Greg.
All right, let's move into stock talk here today. Yeah. And there's only a couple of items. There's a couple upgrade downgrades I wanted to highlight just a second. But really, Gamestop earnings is the stock news of the day here, Matt. I know you got the numbers. They're not really much to read into the numbers themselves. They announced a new CEO as well. Some, guy from Amazon. I'll get his name here in a second. But Matt, the technical response is interesting. Just first off, what did you learn from the earnings, if anything? What grabs your attention here?
How many times are we going to geek out on former executive of other companies going to turn around GameStop? Like,
was the guy's name Jeff Bezos or something?
3 times in a year?
It is not Jeff Bezos. That would be
if anybody can do it.
He needs a job.
He's just sitting on the sidelines. Why not?
He's going to the moon. So
maybe he's bringing GameStop with him.
That would be amazing. I want to see him do it just for kicks.
Well,
just to see if he can.
Okay, based on what I read from Zach's earlier today, maybe Bezos is taking over. Because, guys, I'll tell you, before I get into the numbers, I'm going to read you 2 opening paragraphs of 2 major financial publications on GameStop's earnings today. And just to show you kind of what's happening here, specifically regarding GameStop. The first one. GameStop reported better than expected first quarter fiscal 2021 results. The company was able to achieve significant top line growth while bottom line loss contracted over a year-to-year basis. Notably, the company witnessed sales growth across all categories. Now, your reading of that, what's your take on just that opener?
Can I ask a question before we answer yours, Matt? Can we start calling companies that don't make any money? Can we call them earnings instead of earnings? No earnings. I'm just curious because
it's going to be a while for GameStop on that one. Okay, but based on that, what are they painting here?
Well, their sales growth was up 30%.
Everything was
40%.
up, right? They're painting the pig.
Yeah.
Okay. The next one. Let's there we go. GameStop's meteoric rally this year is one of the first meme stock icons, maybe losing steam after the company said it planned to sell more shares and offered few details about the turnaround strategy.
They're painting, the lack of
what are we doing here, guys?
Clarity as to what is actually happening with the company.
Right?
Yeah,
it may slow. Yeah, that's you kind of have to after you're going up 1,000%. Yeah.
So there's a lot of mixed analysis now going on, and a lot of it is opinion driven, right? Mm-hmm. Now let's talk about the raw numbers, because that's what a lot of this should be based on. You're talking about a company that came out, reported negative 45 cents a share.
We might have lost Matt here.
We lost Matty.
Yeah. Let me give the data. We'll see if he comes back here in a second.
Beat.
There you are, Matt.
Okay.
We lost you for 1
Sorry
second.
about that.
Yeah.
I'll come back to the raw numbers. Mm-hmm. All right. And I do have an unstable connection very quickly. Mm-hmm. But in terms of the raw numbers, the expectation was 67 cents. It came in at 45 cents. And so you do officially have a beat on EPS numbers. Now, how does that beat compare to the rest of the S&P 500 beats, of the rest of the Russell 2000 beats, and the rest of every earnings beat this quarter? It pales in comparison, quite frankly. We've seen discretionary beats that approach 250%. And so, yes, it is officially a beat, but in comparison to a lot of other numbers we've seen across the board in the market, this is not an impressive beat in comparison to other companies out there. Number two, when you're looking at the revenue projections, again, think about the article I just read across revenue projections across all major categories. Revenue came in at 1.3 billion versus the expectation of 1.2 billion. Revenue increased 25.1% year over year. Once again, in line, I would say in line, but revenue 25% year over year, just not good enough, guys. We're talking about a company that has went from $15 to now $300, and that is simply not good enough. And when you're talking about when you break down the fundamentals, you know, and maybe I'm a little on edge because I heard Jim Cramer talk about how $300 price point is perfectly fine for GameStop, but I'm looking at a fundamental scenario where, you know, we're talking about a $22 billion market cap company right now with the price to book at 45. With the price to book at 45. How do you paint that?
I have no idea how you paint it in a positive light. What Jim Cramer said is not only reckless, it says a lot about where that man is in his career, quite frankly.
Well, and that's before I get into the EPS projections for the next 5 years. And so when I'm looking at this scenario, yeah, they got a lot of work to do to turn this around. And I fail to see how they can turn this company to a profitable company.
And aren't I mean, their earnings sucked a year ago, right? So they were coming from a low base, and it was only 25%.
Mm-hmm.
Yeah, they were coming from nothing, like literally nothing.
So as I understand it, just in layman's terms here, so they used to have 2 people in the store. Now they have 3 people in the store, and we're supposed to get excited about it. Is that how it works?
And guys, we're now talking 6 months into this scenario with GameStop, and they've had significant cash injection, and we're still 6 months into this waiting on a plan.
Yeah.
Like we're still okay. You keep saying you have all this money and we're going to do all these things, and we hypothetically can reestablish our company, and maybe we can go out there and do some acquisitions. Okay, because right now all I see is people getting bonuses.
Yeah, getting bonuses, selling shares, hyping up the potential of so-called future. They're bringing new people in to continue to fuel that. It's not in the data yet, and they don't really have a plan they've laid out to the marketplace at all. Yet nobody here in this panel would be surprised in whatever it wants to do from a price perspective in the short-term map, because it's been so crazy. Is the chart starting to maybe behave a little bit more? I don't think so. I am a complete stay away from all meme stocks.
If you think behave is 350 to 250 in 2.5 trading days, I mean,
no, it's obviously not.
Like,
no. Tyler, is there anything from the technical response there that gets your attention? I'm a stay away on meme stocks.
Well, and guys, I don't want to be the guy that's coming in and being like, this is crazy, but this is crazy.
It's crazy. The fundamental reality doesn't reflect anything. Yeah, it's interesting.
Listen, if you want to gamble in the market, this is where you gamble in the market.
Yeah.
Do you have any sympathy for somebody who's down 20% today because they decided to roll this into earnings after it tripled?
If they're a member of Tackle Trading, I do, but then we have education for them.
This is the roulette wheel of the small caps.
Yeah. Well, I mean, shockingly, it's one of the most important players in the small caps, quite frankly.
Yeah.
I mean, the reason the Russell's...
That's incredible.
Think about it, guys. The reason the Russell's down today is GameStop.
See, I disagree. If we pull up the futures for our RTY there, Tyler, we had this conversation, I believe, last Thursday. And I said this, and I'll say it one more time. I think you were asking me what would happen if this broke out above this. It might have been on Trade Masters. I can't remember. But what I can say for honesty is the Russell 2000, as far as I'm concerned, it's finally back on its meds. It's finally got its counseling done. It's actually come back to the Russell we know and love. This is an iron condor heaven right here, as far as I'm concerned.
Not if it breaks out, young man.
That's exactly what Tyler said 7 days ago, Tim. And that's exactly
it
what
is.
Happened.
Give it time. It's 7 days. Give it time.
It's
You are spiking the football. This is down 0.25% today.
Hey, Hey, it did exactly what I said it would do. It hit resistance and it started over. Whether it continues down or not is a different
I know
story
what I heard
altogether.
here.
But
Man, I know what I heard here. Greg's still salty from
Greg's salty from losing.
He's still salty.
Where's Chucky? I want to blast him with this too.
That's all that's going on
here soon.
That is all that is happening there. I like the jabs.
Very quickly, coming back to GameStop, just to finish the thought, this has been and will continue to be a stock that many people follow. And it's good, and the level of importance GameStop has to the market is more important today than it has been in recent history, given the fact that it is a market cap company now at 22 billion. And shockingly, Tim, now it's one of the most important Russell 2000 components, even though it's far above what the Russell 2000 components is, right? When does GameStop get removed out of the Russell 2000 because it's too big?
I mean, from size wise, I mean, whenever they do the rebalancing, I think they usually do it midsummer sometime. I was looking that up this morning, trying to find that as well, because it shouldn't be a Russell component anymore. It's a larger.
It's not. It's a large cap company now,
and it's small cap. So yeah, I agree.
Yeah, it's a large cap company and a small cap earnings.
That's right. That's right. Still losing money.
Earnings, small cap.
Earnings.
I don't know. I think I hate the word earnings. I'm not gonna lie. It just doesn't.
You're supposed to hate it. It's not supposed to happen. You're supposed to hate it, Tim.
All right. Fair enough. So I just need to embrace that. A couple last quick items here. I just saw from an upgrade downgrade perspective. Zoom caught an upgrade over at I believe JP Morgan. I was looking at. And, no, actually from Argus to a buy from a hold. Interesting technical pattern that's been developing. They had a really strong earnings response at Matt a couple of weeks ago. I still love the company. I still think it needs a lot of time to develop. But Tyler, is there something here on a potential breakout from a chart perspective?
There is something here. Yeah, this reminds me of we had this snow set up, this little pop on earnings and base. Hasn't had massive upside follow through, but Palantir is another one that looks similar to that. Peloton should have gone lower. It didn't. It went higher. I think that whole space is starting to warm up just a bit. And yes, it is starting to look tempting.
Mm-hmm. I am interested potentially in it. I like that it's got a very clear line in the sand there. We'll be talking about it, I'm sure, more.
Well, and it also has an inverted head and shoulders pattern that has a potential confirmation above 350. The only concern technically, if you look at this potential reversal on Zoom, is you do have the combination of the 50 weekly and the 200 SMA. Right there in the zone. I believe the 50 is on somewhere around 366, and on the daily, the 200 is about 386. Yep. So you do have some significant resistance there, but I do see a trade between 350, quick journey up to 365.
Mm-hmm.
Yeah. Well, and I just think there's a lot with what's going on in the NASDAQ, with this breakout in the S&P. I just think there's a lot you can chew on in this market right now, in light of the improvement today.
Mm-hmm. Yeah, very good. All right. And there was a couple other upgrades and downgrades, not too significant, but one that did catch my attention was Sherwin-Williams, SHW, just because we had news on these guys yesterday that they raised their guidance. They also increased their forward projected profit and earnings as well. And they are going to increase their underlying cost and pass them on to consumers, Greg, by about 7%. They announced that they have to do that based on rising, costs just in the inflationary environment. Tyler, is there anything in this chart that grabs your attention? Because Sherwin-Williams was a beautiful trender. It's now consolidated for a month and a half. I mean, it's kind of a little bit messy down near the support of that little range, but are you seeing anything on that chart?
Well, I think that the first thing I would say is this is probably the, I don't want to say the poster child, but one of the poster children of a position trading long-term investment stock. You're not really going to see somebody swing trade Sherwin-Williams. Just an observation here. It had a 3-for-1 split recently, which tells me this thing was getting close to $1,000 a share. It's got a fantastic long-term trend. Yeah, long-term looks great. Short-term, I don't know. Give me some momentum or something to the upside to get me interested.
Needs a spark, needs something else. All right, gotcha. All right, guys, that's it for the stock news here today. Let's move into our very last segment. And Greg, we've been doing this each and every Thursday. We call this game buy one, hold one, and dump one. And Coach Greg finds 3 companies within a theme or a sector, an industry, something grabbing his attention, in terms of the market perspective, from a fundamental perspective and longer term thinking. Being the old money master he is, we asked him to do that. And he brings 3 good companies each and every week. Greg, what do you got for us here today in buy one, hold one, dump one?
Well, now that you went through this chart, I'm very, very scared because we had this on buy one, dump one, hold one 4 weeks ago. And look what happened to this stock. So now I'm afraid to say anything about any stocks. No, I'm just kidding, of course. But that was on our buy one, dump one, hold one. So we must have all dumped Sherwin-Williams, I'm thinking. But
looks like it's been a hold, yeah. Sure.
So,
Yeah.
Anyway, this week, if we could throw an XLC there, Tyler. I chose the communication sector. Looking at another breakout, just recently had one, looking for another breakout right at that 80 level there. I really like where this space is at. It's been showing some strength. You got the NASDAQ coming back. You got a lot of little tailwinds here that are helping us out here. So with that in mind, I went and looked up a few different media companies. So in the communication sector, again, we always want to make sure that we're looking not only for opportunities in specific stocks, but we'd love to have that push from the sector as well. And in this case, we have it. So what I came up with this week was 3 media companies. The first one is IPG.
Okay.
So IPG, if we look at the technical there, ready for a little retracement, little flag pattern there. Broke out today, but out of that flag pattern, turned a little bit red recently. Just kind of a juggernaut, this thing. You look at where it went from November, it has its pullbacks, but each pullback seems to get bought and just sent higher. So, technically a good looking chart, as far as I'm concerned. Been riding a 9 here for a while, or I guess that's Tyler's your 20, riding a 20 for a while there, which has been decent. From a fundamental perspective, got a few different things to look at here. Obviously priced around 33, 34 bucks. The dividend yield for this is 3.22%. We've had 8 years of consecutive dividend increases. Their dividend started in 1990. Their payout ratio is a screaming 95%, and their PE ratio is around a 30 right now. Mm-hmm. So I got a few other data points for us this week that I added on. Obviously, we've been doing the sales growth. So the sales growth for this year is about 6.8%. Sales growth next year is projected at about 3.4%. So a little bit of a pullback. And fundamentally speaking, I wanted to look at these companies and see how much strength they have just in general. So I went and I looked at a few other metrics here. I looked at assets versus liabilities, free cash flow, and a number of years of consecutive increases for net income. Okay, so assets versus liabilities, IPG sitting on about 18 billion in assets, and they have about 9.5 billion in liabilities. So pretty good asset to liability ratio there. Free cash flow, they're sitting on about 1.7 billion, and their net income increasing number of years was actually 0. Okay.
Okay.
So that's free cash flow. That is on an annual number. That's how much they're getting each year, correct?
Yeah, that's the capital they're sitting on essentially, right? And they do give that updated number every year. So you can actually look and see if that's increasing or decreasing, which is also a good metric to pay attention to.
I got you. Okay.
Okay. So the next one up is OMC. So if we look at OMC here, good chart here, kind of a little bit of consolidation, a little sideways action here. Hit that high, pulled back, but relatively holding up relatively well. Kind of just playing with that 20 MA there. Potential breakout opportunity where it sits right now. This is one of the higher dollar stocks we're going to look at this week, so 83 bucks. But just generally, uptrend. Nothing too shabby there. Dividend payment coming up shortly there. Mm-hmm. So fundamentally speaking, $83.50 price tag. Dividend yield is 3.35%. 7 years of consecutive dividend increases. Started their dividends in 1986. payout ratio of 59%, a PE ratio of 19, current sales growth around 8%. Next year's sales growth is 3.1. Assets versus liability, you're looking at about 27 billion, 27.5 billion in assets versus 24 in liabilities. So the ratio not quite as strong as IPG. Their free cash flow, they're sitting on about 2.1 billion. And again, their net income it did not increase from last year to this year. So they got a 0 in that category. All right.
Gotcha. So that's second. So we got IPG first, an advertising agency. Now we have OMC, also an advertising agency. Both have very similar dividend payouts in terms of just the raw percentage, different ratios, a lot of different metrics in the fundamentals as well that we got to wrap our head around as we're playing the game. What you got third here, Greg?
Comcast is the third one, CMCSA. So this was put under the media industry group, and that's why it's in there. I know it's a little bit different company, but it's all in the same kind of group. So this one here, chart's not as pretty as the other two as far as I'm concerned. Still in a bullish trend. Does have a breakout potential here, I think, especially around that 59 level there, but a little bit choppy here, so not quite as clean as the others. Fundamentally speaking, $56 price tag. Their dividend yield is under 2% at 1.78. Their years of consecutive dividend increases is up to 12. They started paying dividends in 2008. Their payout ratio is a paltry 38%.
Okay.
Their PE ratio is around a 22. Now their sales growth, they're 9.2 for this year currently. That's a percentage. And then they're expected to 6.4 next year, almost double what the other two were having. Again, same industry, different type of business, but their assets versus liabilities, this is where they kind of separate themselves. They have 274 billion in assets and 182 billion in liabilities.
Mm-hmm.
And then free cash flow, they're sitting on approximately $15 billion. And again, they also fell into 0 years of consecutive dividend increases for consecutive net income increases. Now, typically I throw that in there because fundamentally speaking, I like to see companies do that. However, last year happened to be for this particular space. You don't find actually too many of the companies in this industry that are going to be they're going to have that increasing. They kind of took it on the chin, I think, with the pandemic. So that's kind of why those numbers come in. But typically I look for those. I'd like to see net income increasing year over year. It's a sign of strength of companies. So it just happens to be this sector. So.
Gotcha. So here we are. We got three different components here for buy one, hold one, dump one. The nature of the game. Tyler, I know that you've got some of the data that Greg compiled in a little spreadsheet just so that we can see it visually. Let's walk through each of them one at a time here, Tyler. And I'm going to have you go first. So kind of just explain what we have from a data perspective. Then we can go back to the charts, make some decisions, and you're going to be up first.
Yeah, so this is just to recap. I like to have these side by side because you kind of get lost in the numbers sometimes if you're not jotting them down like we do. So, so I would just compare these. The stock price difference doesn't matter to me, right? I'm not going to favor an $83 stock versus 33. The reality is, you could do splits. The price changes, so I wouldn't really base my decision off of that. Dividend yield. So 322, 335, 178, and Greg is much better at fundamental analysis than I am. So I want you to point out if there's any flaws in my thinking here, Greg. Okay. But I assume that if Comcast has a lower dividend yield, it's because they're using their capital for other stuff, right? They feel like it's better to reinvest in the business.
Well, you can see that in the payout ratio, right? So they're only paying out 30% of their earnings. So without doing a deeper dive, you can expect that goes that money goes back into the business at some way because the shareholders are not getting it, right?
And for me to be compensated for that, I don't care that Comcast has a lower dividend yield. If they're going to grow more and I'm going to get paid on the stock price going up, whatever, right?
Mm-hmm. And that's exactly why I put those sales metrics in there for that comparison. So.
Yep. Dividend increase, 8 years, 7 years, 12 years. Longer the better, obviously here, right? The longer they've been increasing dividends, the more business cycles they've been able to live through and still have good earnings enough to where they can bump up their payouts. Dividend start year, I mean, the longer the better. So I guess OMC takes the kick on that back to 1986. Does it concern you, Greg, that the payout ratio is as high as 95%, or is that be careful? Curious.
Yeah, so that's actually why that metric's in there as well, Tyler. It's something I look at it all the time. The fact that if it's at 95%, obviously once they get to 100%, every dollar of earnings they got is going to pay a dividend. Then they're starting to dip into their cash to run the business and things like that. So yeah, payout ratio does matter. Now, a couple of things can change that. Obviously, earnings can go up and that payout ratio can come down, or they can cut their dividend, which would also bring that ratio down. And that's always the concern, at least for an investor over a trader, is are they going to cut that dividend? That 3.22% is nice, but if that ratio gets too high, now companies like an ExxonMobil, during the pandemic, things changed for them. Their payout ratio was in the hundreds of percent, but of course they also sit on mountains of cash. They were able to weather that storm. The question becomes is, can IPG do the same and bring that number down?
Sure.
That's really how I look at it.
Got it.
All right. Go ahead, Ty.
Well, I was going to go through the rest of them, Tim.
Keep going.
But,
Keep going.
Yeah. So PE ratio, I assume, so normally, and you correct me if I'm wrong here, the higher the PE ratio would be okay if they have a higher growth rate, right? Because they can grow into that. The earnings can grow into it. Does it concern us if it's the highest of the three and it doesn't have the growth to back it up? Does that maybe make it a little more overvalued?
Yeah, so the PE ratio is just you're just trying to figure out a measure of value, and you kind of want to compare apples to apples. Now, I did kind of qualify this at the start, even though these are in the same industry, they're not necessarily the same type of company. The first two are definitely. So, you look at that and you say, okay, what am I getting for my dollar, right? For $1 of earnings, what am I what am I paying for? Well, as you can see, one's considerably, higher in price, but it's got a lower PE ratio. So in comparison, you could say that that's potentially a better value. But again, it's only for comparing what you're getting, right? Earnings metric there, if you will. So
right.
So I prefer.
Okay. Tim,
sorry, just one thing, Ty. Sorry.
Yeah.
So if all things being equal, a lower PE ratio for if everything else was exactly equal, a lower PE ratio is better, obviously, right?
Right.
So.
This one's tough for me, Tim, because there is, and maybe this is why this particular exercise is so interesting. It really depends on, it's in the eye of the beholder, right? Which one of these metrics do I value the most? I think all their charts look fine, right? So it's hard for me to make the case based off of these charts. They were all fine to me. So when I look at the fundamentals, I say, well, if I want a better dividend payer with a more sustainable PE ratio, I'm probably going with OMC, right? If I want somebody who has the potential for more growth, I'm probably going for Comcast. In this case, I hate punting. I don't have a strong opinion. I'm punting to Tim.
All right, you can punt. I will absolutely field that ball, not drop it, and take it back like a Devin Hester touchdown here. Greg should be in the Hall of Fame as well. A couple of things. Number one, Ty, when I'm looking at the charts, I actually think there is discernible differences when you look at the big picture, because we've got a weird 12-month period for many companies coming off post-pandemic. Pull me back on like a weekly chart on a couple of them. I think you'll see a couple of subtle differences and some significant differences. Comcast, beautiful trend from 2020 till now, but give me like 10 years on this data, because we're talking fundamentals. We're not talking short-term swing trading mechanics or anything like that. Comcast has been a juggernaut from a price perspective for the better part of a decade, coming all the way from $10 a share to begin 2012, 13 area. And now we're all the way up near the $60 mark over the last 10 years. I learned something about Comcast today, by the way, as I was going through watching Greg kind of explain all the data. I went and looked up some of their fundamentals on the way I look at it, and I read through their company prospectus. Greg, did you know they own the Philadelphia Flyers?
Yeah, I knew the arena had that on their
They
their
own the
board.
company,
So
not just not just
I didn't.
licensing. They
Okay, I
own.
did not know that. No.
They own the Flyers. So obviously some of their revenues over the last year. They also own Universal Studios in Florida. They own all kinds of different theme parks. Comcast is not just a cable company. Now that's the big bulk of their revenue. But the interesting part to me, they do pay a nice dividend. I see potential growth. So there's significance there. When I look at the other two here, Ty, they're both advertising agencies, so take a look at IPG, for example, and these are in communication services, all within the same sector. Significant breakout in 2021. Look at that thing neutral for the better part of 6 years. Finally caught a breakout. We're starting to run, but this is a dividend payer. This is not a growth company over the course of a 10-year period. It's had a real nice run right now. So on that daily chart, yeah, that chart looks great. And I'm not going to take anything away from it. The daily chart does look great, but there's context on that one, in my opinion. IPG, and then the last one, OMC, if we take a look at the big picture chart, it still has not broken out of a multi-year range. So Tyler, I'm with you. Daily charts all look good. I see differences in the way these companies have performed over the course of a decade, though, which leads me to the conclusion of this. I think what you do is you either buy or hold Comcast, okay? And I'm going to say that we hold Comcast. And then you got to pick one or the other, which one you like. And because there is a difference between the three. You got Comcast, the entertainment giant. Then you've got the other two, which are ad agencies, very similar to each other and similar fundamental metrics. And if we go back to the fundamentals on a couple of those different ones, I'm looking at OMC and I see a payout ratio of 59%, a PE ratio of 19. I see a forward PE ratio of 13. I know sales numbers for the current year are 8%. They're going to drop next year. Everybody had a rebound this year in their metrics, right? So I'm okay with that. You always want numbers going up over time. Who doesn't want numbers getting bigger over time? It's the nature of growth in the market. But I like OMC better than IPG from some of those simple metrics that Coach Greg has educated me on in the last month and a half as we played this game. Lower payout ratio, still good, healthy. And I actually think OMC has the potential to break that resistance and start to take another leg up where IPG's already done it. Now that's the eye of the beholder part. Maybe you go for the current strength in IPG, you pay the higher PE ratio and you pay for that better trend in the short term. But I look at the performance over the course of a decade. I think Comcast is very different from the other two. And so I'm going to hold Comcast, buy OMC, and dump IPG. That's my choice.
Shame on me for not looking at the weekly chart. I like the logic. I agree with all that. I'm with Tim.
So Greg?
All right. So I agree with the way you set it up there, Tim, but I agree for different reasons. So
all right.
And I gotta be me. This is why they call me old money. So I'm going to hold Comcast. I'm going to buy OMC. And I'm going to dump IPG, and here's the reasons why. IPG, I think it's overbought at the place that it's at now, as per the charts we looked at. Second of all, that payout ratio for this company is a bit scary. I don't think it should be that high. Also, the PE ratio being at 30. When you start comparing apples to apples, IPG and OMC are very apple to apple. You could say that Comcast is a pair in with a couple apples. So I would argue with that. So that's why IPG is getting dumped. Their sales growth numbers are okay, but not that massively impressive. And then their assets and liabilities, they're strong fundamentally, but they also have the least amount of free cash flow. So that's why IPG gets dumped. Now, as for Comcast, why I'm keeping that, there's one glaring thing that sticks out to me. What's happened in the last 12 years? What is it, 2021 now? So 2008. So we've had some significant stuff go on economically speaking. And literally Comcast, if they started paying dividends in 2008 and they've increased it every year for 12 years, they've literally increased it every year that they've been operating. That to me, as an investor, as a dividend guy, that screams good to me. I'm happy with that, right? The other part of that, and you did mention it, was it does have the potential for growth. And if you look at that longer term chart, it looks fantastic. They've got the best growth numbers across the board here. So if you want to give me my cake and eat it too, well, you've seen me, I eat a lot of cake. That's just the reality, right? So I want that growth and I want the dividend if I can get it, right? So that's why I like Comcast. The other part is I look at the quote unquote moat that they have. They're sitting on $15 billion in free cash. So even if things get economically tough, right? They've got the ability to hang in there as far as I'm concerned. So that gives them a little bit more stability. That's why they're the hold for me. And then OMC, like I said, I like the small payout ratio. I like the PE ratio being the lowest of the bunch. They've still got some growth. The only concern I have at this point in time is their assets versus liabilities. I would like to see a little bit more assets than liabilities. They could close the shop and still be up a couple billion plus a couple billion in free cash flow. So they're going to be fine that way. I just would prefer a bit of a wider spread there. But overall, I like where they're at, and they just happen to have the highest dividend yield as well. So those are my reasons.
So I got the same conclusion, but I took a slightly different path. Is that what I'm hearing?
So I agreed with what you did. Buy one, dump one, hold one. Like I said, for me though, I had different reasonings to get to that same place.
Sure,
and
which is what I love about the segment, Greg. You get to kind of impart some of the wisdom you have around fundamental metrics and kind of lay it all out there. A little different stuff than what we do just on the shorter term stuff in other segments. So I appreciate this one here today. 3 stocks in the communications sector, 2 ad agencies, and then the behemoth entertainment giant Comcast. If you're out there, Team Tackle, which one would you buy? Which one would you hold? And which one would you dump? Let me know in the chat. Always interested to hear your thoughts on it as well. All right, guys, let's start moving back on the market and get some final thoughts here. I see, we've got let's get the S&P chart. Maddie, I just see your name pop back in here. I think you're back, sir. Is that right?
I popped in, listened to you guys do Greg's segment. Really enjoyed it. Thank you for that. Hopefully the community got as much as I did. And honestly, I loved your guys' discussion and breaking it down and disagreeing, even though you're disagreeing on the same things. Right. So you're disagreeing to agree. I love that. You guys, it's so cute. But I love it. I love the conversation. And what I love about this conversation on fundamentals, guys, is fundamental analysis can be subjective, right? Based on what you personally look at. Some people look at valuation, some people look at growth metrics. And I just love the minds coming together and just having a discussion on it. So I just really did appreciate, as a consumer listening in on the conversation, really did just appreciate it.
Yeah, I'm glad you did, Maddie. Do you have any thoughts about these broad markets as we're closing up shop here today for the team?
You were talking about Comcast, and they're definitely a short for me.
Sure. Comcast.
Right. Do they happen to be your provider there, Matt?
We'll leave that one open-ended.
That's inside baseball. Appropriate day to bring up Comcast. Oh, that's funny to me.
Yeah, you want to talk about fundamentals? I got a few things to say about the fundamental nature of Comcast internet usage right now.
If that's the case, I want to short every communication company in Canada because they're
actually
all terrible. But
here's the thing: it should actually lead to a buy, given the fact that I'm sick of Comcast internet and I'm still using Comcast. so maybe I reverse my choice. It's a buy for me.
Yeah,
nice.
Yeah.
I might be having a middle-aged moment here, Maddie, but I'll tell you, I didn't know Comcast owned the Philadelphia Flyers.
I didn't know that either.
I didn't know
hockey?
That is hockey.
Yeah, that's I've never heard of
They used to have a majority stake in the Philadelphia 76ers. They sold it to a private equity firm about 15 years ago. But they're from Philadelphia. I didn't know that. I did not know that.
The ownership of sports groups, I think everybody has a percent, so it's kind of hard sometimes, but I didn't know that. No.
Yeah, it's interesting. Tyler, final thoughts on the S&P. Start taking us out here on today's show.
Yeah, look, so far so good. We're holding the breakout. NASDAQ strong. Russell's coming back a little bit. I'm pleased by what I see intraday. So let's root for this breakout to hold and see some momentum come back.
Yeah. Greg, final thoughts from you?
Yeah, so nothing's really changed. I want to see this breakout be legit, and it needs to close above that level that it just broke out. If it does, then hey, like I said, I see higher things in the future, and that's good news. Yeah, I hate to be this way, but it's always kind of a wait and see for me. I look for a little more certainty. So yeah, let's see how the market closes today, and do you go through your daily setup after that, and then you can position yourself for the next day. So.
Fantastic. My last thought's real simple, guys. Been an interesting week in the market. We've been waiting for a potential breakout. Here we are. We're pushing towards it. We'll see how it closes. Obviously, it's a light news cycle right here in June, but you have to respect those technicals. And both of you guys, Tyler and Greg, you do a fantastic job weekly on the options and stock report. I just wanted to highlight a couple of companies from last week's report as we close out the show. Take a peek at Google, Tyler. This is one. Greg, you had your feature around the communications area that today Google is the top stock in communications. That breakout finally developing here today, the large price stock. I know Tyler did a breakdown on the option report on how you might be able to trade that from spread perspective, different ways that you can approach it. Looking great and gorgeous there today. Microsoft, which was also on the option report, in my opinion, strengthening here, had a nice little week, broke out early in the week, continuation of that trend right now. But even right there, one of your stocks on the stock report, Greg, Kinder Morgan. And Matt, we highlighted energy throughout the week. KMI was one we've been watching out. And here we are testing a little bit of a breakout here on a Thursday. So if you're out there in your team tackle, always remember to go back and build those watch lists, go through the videos on the weekend reports, make sure that you're getting those candidates lined up because you don't know when that action is going to come in and take off. And Greg, any thoughts on that here? Because there's some interesting chart development in my opinion.
Yeah, no, we've been, again, like you said, waiting for some opportunities. I know this past stock report, we got a bunch of opportunities that fired off on Monday. There was a few that didn't. Kinder's, taking a few days to get going. One of the things that I think, is a very prudent move for any trader is to build into your routine, reviewing those. We basically, with the stock and options report, you get a new watch list every week. Build into your routine, looking through that watch list on a regular basis. It should only take a few minutes once you kind of get used to the routine of it, and it can provide you with a lot of opportunities. So
yeah, I love them. I love them, guys. And we're going to be bird dogging tomorrow when Coach Frank joins us. For the halftime report, he'll bring some charts for us to break down and analyze as always. Have a wonderful rest of your day, Team Tackle. I did drop links to last week's options report, so you can go check it out, and the stock report, as well as the 15-day trial to Tackle Pro. If you're not yet a member of Tackle Trading, go get those trials. Go review last week's report. Get ready for the weekend. This weekend with those reports, it's a tremendous value. And a programming note, one last thought tonight, 8:30 Eastern, Cash Flow Club. Come and join us on the webinar at 8:30 p.m. Eastern. Have a wonderful rest of your Thursday, guys. We'll see you back tomorrow, same time, same station.